This is Terrence Andre Banks with Information Age Financial Solutions coming to you about real estate. And if you live in Denver, Colorado, this may be some good news if you're looking for a crash imminent to happen in your area. Stumbled across this article from the Denver Post, not a place that I visit frequently, but when you got titles like this, no money down mortgages make a comeback in Colorado, you can see that the real estate bubble 2.0 is right in full effect. I'm going to just dive right in. As always, I'm going to put a link in the description. The Credit Union of Colorado received a loan product that's disappeared following the housing crash a decade ago. Why would you think it disappeared? Because it's because of the volatility and the dangers of this. The zero down conventional mortgage. Reaction to its return will likely range from first-time home buyers wondering what took it so long to survivors of the foreclosure crisis asking why didn't they waken a financial beast better left for dead. We are looking for a way for individuals to get into the market right away rather than having to save a down payment while the prices are going up, says Doug Schneider, Vice President Marketing at the Credit Union. Now, what this makes it surprising that credit unions are usually a piece of people that are supposed to be, a little bit more sounder with their business practices, and especially because credit unions are based on it's more of a community event, and they really. But when you're starving for yield, and you're having state and state pension problems, this is the reason why. So look at this. Let's continue on. Which guidance starts serving state employees? Metro Denver home prices were rising 8.6% in April from a year earlier. And while that's below the pace of prior years, only a few areas can beat Denver when it comes to home price appreciation in the past 5 years. Many first-time buyers struggling with heavy student loan debt and escalating home prices have found themselves always one step behind when it comes to saving enough for a down payment. Now they must contend with rising interest rates. The credit union will underwrite mortgages up to 97% on homes valued up to $467,100 with an added cost each month for private mortgage insurance. The Credit Union of Colorado's new twist is that it will cover the remaining 3% of a home cost via an internet-free loan repayable at a future sale or refinancing. What can go wrong with this particular aspect of doing things? We never seem to learn. Interest-free, however, doesn't mean no cost. Borrowers who qualify will pay 0.375% more on their 30-year mortgage rate than if they had made the down payment, said Andrew Kotaska, Director of Mortgage Loan Services at the Credit Union. The going rate the credit union charges on a 30-year mortgage, 4.6.2%, will rise to 5% for someone borrowing under the zero down program. Wow. Still, 4.62%, 5% is still lower than historical lows for interest rates for homes. If interest rates keep rising, as many forecasts predict, then borrowers will likely lock in a lower rate versus waiting another year or two to save up enough for a down payment. If rates stabilize or rise so much that home prices start falling, then waiting would prove the wiser choice. Waiting is always the wiser choice when you're dealing with an echo bubble of real estate as well as stocks. And this is the everything bubble because you got bonds as well, especially with the pension crisis brewing. Loom Bars, a mortgage industry veteran with Premier Mortgage Group in Boulder, said between the higher interest rates and private mortgage insurance, borrowers could add more than 1 percentage point to their mortgage rate. He added there's one reason why zero down loans went away, along with a host of other riskier loan products that contribute to the housing crash. If you can't save, what are you doing buying home with nothing down? Well said. Rolling out stuff like this marks cycle tops, he warned. VA loans had been 100% since 1944, but veterans learned special disciplines. Veterans can obtain zero down mortgages, and income qualified borrowers can do so through the Colorado Housing and Finance Authority. Katasa said the credit union's new offering is the first conventional zero down loan product he knows available in Colorado, regardless of income or military service. To qualify, a borrower must have a credit score of 700 or higher and total debt payments that don't exceed 43% of income. Any property must be in Colorado and owner occupied. Owners must take an online education course and pass a quiz. Yeah, like that's really going to stop a crash. Our underwriting standards are a little more stringent, he said. Kataska and Snyder note that their version of zero down loan differs from those issued in the first part of the last decade. They are being made to prime rather than subprime borrowers and aren't being converted to securities and sold to investors. Credit Union of Colorado will hold loans it makes in its own portfolio. If it miscalculates risky, says because home prices start falling or recession lifts defaults, the credit union and its members will bear the costs. We can easily do 50 million in loans, and we would take responsibility for all of these, Schneider said. You would think that, well, a credit score of 700 higher in total and debt payments that don't exceed 43% of income sounds like a little more sounder practices from before. But anything with zero down doesn't allow people to have any skin in the game. And with prices, especially when you start the total of this video in this article, that because the prices continue to rise, and I've done videos in the past talking about a real estate bubble that's already here. You can see it in every investor meeting, or just in general, people are being priced out. It definitely signals we are in another state of a crash. So if you're in Denver, Colorado, and it sounds like good news and it's too good to be true, well, it definitely is. If this video has been any value to you, please subscribe. Definitely leave some comments. Until my next video, I'm out.